Again, there's noise in the background. Yes, it's better now.
Good evening, everyone. Welcome you all. In view of the significance of the insurance sector in the Indian economy and to spread the awareness of various schemes in insurance, especially during this pandemic, it is felt that the Institute should observe June 2021 as the Insurance Month. CMAs are the professionals who fuel economic activities. Insurance industry is the barometer of economic growth. Insurance provides basic financial protection, generates investments needed for economic activities, and insurance is the only industry in the world which has the highest potential for employment, self-employment, and consultancy options. Added to this, insurance stimulates economic activities in all spheres. It builds relationships between nations. Insurance industry also provides career opportunities to qualified and efficient CMS in the areas of field underwriting, financial and medical underwriting, operations management, finance and accounts, investments, internal and external audits, investigation of claims for frauds, actuarial functions, etc. The Institute will be spreading the temper of insurance awareness and the scope as professionals to work in the sphere of insurance. The Insurance Month celebrations and observance is an initiative of the Banking Financial Services and Insurance Board (BFSIB) of the Institute in association and active involvement of other committees, regional councils and chapters of the Institute. We are also having association with National Insurance Academy who would be jointly collaborating in our efforts for organizing two webinars during this month. All the events will be streamed live through the official YouTube channel of the Institute to reach the students, members, and all stakeholders of the Institute. Today is the first webinar on the topic Evolution of Insurance Industry Pre and Post COVID-19. It's an honor and privilege to have everyone here today, sir. Let us grace the webinar with the Institute anthem.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय ॐ शान्ति शान्ति शान्ति.
Now I would request CME Chittaranjan Chattopadhyay sir, Chairman BFSIB, to give the welcome address in a few words. Over to you, sir.
Thank you, Madam Indakshi Bhattacharya.
Thank you, sir.
Very respected chief guest of this day of the observance of our insurance month, our very honorable CMA PK Arora, who happens to be the doyen of insurance industry, and our speakers, esteemed speakers, CMA Deljad Jivhasa, one of the very, very learned insurance professionals and speaker. I have, in fact, I'm fascinated to listen from him in various occasions. We have with us also another CMA Jividhanathan sir, and our moderator of this today's program, CMA SP Padhi, my dear friend, and my president, my beloved president, CMA Vishru Basu, and my vice president, CMA P. Raju Iyer, and all the officials of this, today's auspicious beginning of our insurance month, and many attendees, those who are esteemed attendees who have participated from India and abroad, ladies and gentlemen. This gives me an immense pleasure that yes, the Award Institute has been continuously striving hard to serve for the memberships, serve for the students, and serve for the nation itself by organizing various learning sessions, through organizing various observance of months. In the month of April, we have started this year with the observance of, from the month of April, we have started with MSME month. Then in the month of May, we have observed our agricultural month. This month of June, we are observing as insurance month, because all these sectors are contributing to the economy, Indian economy, during this pandemic times in a very robust way. And when this COVID-19, which began as a health crisis, has now taken over as a financial one, with the global economy crashing and multiple sectors taking a major financial hit, the insurance industry has become a vital part of the new reality of the economy. And India is one of the 15 worst COVID-19 affected economies. In fact, insurance industry has got lot many issues during this pandemic, and of course the situation is not very much, it's a very dark one. The future prospects of the industry seems hopeful, because in this pandemic time we have seen the general insurance, health insurance, then life insurance, automobile insurance, and they have all come up with their various types of their innovative methods to serve the country, to serve the countrymen, and ultimately we are really safe in that perspective of that. And insurance industry rides on the back of other industries. Hence, unless the overall economy bounces back or the insurance industry finds business in hitherto uncovered areas, the industry is likely to struggle to maintaining its momentum. And these potential challenges which are there, insurance industry is definitely they are looking for, and insurance industry are taking required measures to ensure a smooth transitions of the industry into the post-COVID world. From the front offices, encouraging their customers to connect digitally, to supporting their agents financially in these uncertain times by providing them advance commissions, the insurance industry is set to witness a major transition. And major disruption will be caused by digitization, which has already taken place in the insurance industry globally. But the onset of COVID-19 crisis has accelerated the transition process. And we are very much hopeful that our insurance industry in India will prove that they are one of the best insurance industry in the world. Today we have our auspicious presence of the CMA PK Arora, and we'll be hearing from them. Sir, we welcome you all. You have come here within your busy schedule. You have made it a time to come here in our program. And I also convey my heartfelt thanks to all the speakers that they have also made their time to come over here to give an opportunity for us to learn, to unlearn, and to relearn. So in this particular program, we are all eager to hear from you, sir. With this very few words, I welcome you again all and all the participants in this auspicious beginning day of our observance of Insurance Month. Thank you. Over to Indrakshi.
Thank you, sir. Thank you, sir, for your inspiring speech. Now I will request CMA P. Raju Iyer, sir, Vice President of the Institute of Cost Accountants of India, to give his address in brief. So over to you.
Wishing everyone a happy and healthy days ahead. Namaste. Thank you very much. Our respected Honorable Chief Guest, CMA Parbod Arora ji, our eminent resource persons, Delsa Jibasa, and CMA Vaidyanathan ji, and our Honorable President, CMA Visuru Basuji, and Chairman for BFSA Committee, Chittaranjan Chattopadhyaya, and Chairman for Journal and Region and Chapter Coordination Committee, CMA A2Z Murthy ji, and our honorable members and everyone, other staff and staff members and students and members. I am very happy to be here, and I am very much eager to listen to our chief guests who are all eminent. As pointed out by Chairman for BFSA Committee, insurance is a very, very important area. As of today, it is having lot of scope, lot of opportunities, and it is having lot of risk. So what are the risk factors, how it can be used by the CMAs, and how we will be able to move ahead, how the economy can benefit from insurance, and not only on manufacturing industries. Now we are moving into agriculture sector also, especially small MSME sector also, and other areas also where the insurance can really help the business people and others and farmers and agriculturists and everyone, so that everyone can be benefited, especially the youth, the students who are all now taking the risk. They should also get the adequate insurance protection so that they will be able to move forward and take the lead, so that the economy can grow, country can grow, and the world can progress. I'm very much happy to be associated here and join the inauguration program of this month. And Chitran Chatterjee is always very much this one. And 2 months before, he was making MSME as a month. And last month, he has agriculture month. And now this month as an insurance month. We are very happy. And our president is very much always supporting and fully giving his support and concern for all the initiatives taken by all the council members. I'm very much thankful to our president. I'm very much thankful to the chief guest and the resource persons, CMA Vaidyanathanji and Delsa Jivaji and Sivapadi, who is going to moderate this program. He is also expert in insurance industry. And of course, A2Z Murthy is very much this year. And I'm thanking everyone, wishing everyone a happy and healthy days. Thank you, thank you, thank you. Wishing the program a highly successful month. Thank you, thank you.
Thank you, sir. Now I would request CMA Bishwarup Basu, sir, President of the Institute of Cost Accountants of India, to give his address in a few words. So over to you, sir.
A very good evening to all of you. CMA P. Raju Iyer, Vice President of the Institute of Cost Accountants of India. CMA Chittoranjan Chattopadhyay, Chairman BFSI Board and Indirect Taxation Committee. CMA Shivapada SP Padhi, former Chairman EIRC of ICAI. CMA Pramod Kumar Arora, Member Actuary, Insurance Regulatory and Development Authority of India. Honorable Guest G. Vaidyanathan. CMA Delzad of Associate Vice President Risk Management, ICICI Lombard General Insurance. My professional brothers and sisters, CMA Dr. K. Chiranjeevi AVSN Murthy, Chairman Journal Publications Committee and Regional Council and Chapter Coordination Committee. CMA H. Padwanavan, former Vice President, Institute of Cost Accountants of India. My professional brothers and sisters, Chairman Hyderabad Chapter of Cost Accountants. A very good afternoon to all of you. Friends, it is indeed a proud privilege for me to address you all at this Insurance Month webinar on evolution of insurance industry pre and post COVID-19, organized by the Institute under the aegis of BFSI Board of the Institute of Cost Accountants of India, along with Hyderabad Chapter of Cost Accountants. At the outset, I convey my heartfelt gratitude to the honorable speakers. I am also grateful to CMA G. Vaidyanathan and CA Daizad, ABP Risk Management, ICICI Lombard, and other eminent guests. Friends, COVID-19 crisis continues to have a significant impact on the individuals, society, business, and the wider economy across the globe. The insurance industry had not escaped its impact, but insurers have responded quickly to the crisis. As the broader economy recovers and responds to the pandemic, insurers will face a number of challenges, but also see many new opportunities in the medium to long term. While the industry employs new rules of work and shifting regulations with digital initiatives, some of the more direct impact that translates to lowering profits and growth are forcing insurers to cut costs and perform more efficiently at the same time. Friends, the pandemic has caused a shift in customer preferences, preferences. With the pandemic, while the pandemic has resulted in increased claims across certain sectors, for insurers, the new post-COVID-19 digitally economy shows promising avenues for growth. Travel, health, and hospitality, contingency covers, cybersecurity, commercial credit, some areas of immediate impact of COVID-19 on the insurance industry. The shifting shape of global logistics and rising digital adoption across industries show new possibilities for growth to insurers. While other industries grapple with the question of business continuity, insurers must take a digital first approach to enable the operations. Top players in the industry are responding to the pandemic by shifting the focus inwards and revitalizing the operational infrastructure of the insurance enterprise with integrated customer relationship management platform. This is helping companies accelerate sales in line with evolving customer preferences. Others are partnering with technology leaders to prototype and develop innovative products and business models. While uncertainty looms, insurers must deploy disruptive technologies to reinvent their core for mitigating both the short and long-term impact of the pandemic. Friends, today we will be gaining more insight into the evaluation of insurance industry pre and post COVID-19 with detailed deliberation of our distinguished guests and speakers. Before I put a full stop here, I quote a few lines from Rabindranath Tagore. I slept and dreamt that life was joy. I awoke and saw that life was service. I acted and behold, service was joy. I pray to God for your health, happiness, and prosperity. Stay safe. Please follow COVID-related norms. Wash your hands frequently. Wear mask. I wish you all the best. Thank you very much.
Thank you, sir. Thank you so much, sir. We are having with us CMA Pramod Kumar Arora, Member Actuary Insurance Regulatory and Development Authority of India as our chief guest. Sharing his brief profile, CMA Pramod Kumar Arora assumed charge as Member Actuary in Insurance Regulatory and Development Authority of India on 4th January 2021. Prior to joining IRDAI, he was Secretary in International Operations in LIC of India. Mr. P.K. Arora joined LIC in 1986 and he has 35 years of experience of working in various departments in different capacities. His experience includes 8 years of work in LIC's investment department, then 2 years as product actuary, 4 years as appointed actuary, and 2.5 years as signing actuary in LIC International Bahrain. In addition, he has got marketing exposure for more than 7 years as branch in charge in different branches of LIC and also worked as programmer for 2 years. He is the member of the Institute of Cost Accountants of India and fellow member of Institute of Actuaries of India. He is also a rank holder from Punjab University in BCom. Sir, welcome you. It's a privilege and an honor to have you on board, sir. So over to you for your address in brief.
Thank you very much for the nice introduction.
Thank you,
A very
sir.
good evening to all of you. President of the Institute, Mr. Viswarup Basuji, Vice President, Mr. Raju Ayerji, Chairman BFSI, Mr. Chitranjan Chattopadhyay, Mr. Murthy, other participants, other speakers, and my dear friends. It's indeed a great privilege and pleasure for me to be associated with the Institute and with all of you through this webinar after a long gap. I still remember the time when I cleared the final exam of the Institute in the year 1989 and I became a grad CWA. At that time, I was working in LIC and I was just 23 years old. But this qualification not only gave me a lot of recognition and acceptability at the workplace, but also cleared the way for future advancements in my career in a very big way. So now, after having worked for 35 years in the insurance industry, sitting at IRDA, I can see the things, how these have evolved. I have seen the things, how the insurance was sold now, how the insurance was sold at that time, and how it is sold now. How the claims are processed at that time, and how these are processed now. How the other things related to the insurance marketing activities and investment activities were done at that time, and how it is being done now. So now it is a very relevant topic, the evolution of insurance industry pre and post COVID 2019. So in these 35 years, if I see, the major turning point in the evolution of insurance industry came in the year 2000 when on the basis of the recommendation of a committee, the insurance industry, insurance sector was opened for private players with FDI limit of 26%. Before that, there was only one life insurance company in India, that was the Life Insurance Corporation of India. And at this time now, there are 24 life insurance companies in India. At that time, there were only 4 non-life companies, namely all in PSU sector, namely Oriental, National, New India, and United India. And if we see now, there are 27 insurance companies in non-life segment operating in India. At that time, there was no standalone health insurance operating here. Now we see there are 6 standalone health insurance companies operating in India. At that time, there was only one reinsurer, that is the National Reinsurance General Insurance Corporation of India, GIC Re. And now we see there are 11 entities working in the reinsurance segment. Most of them are multinationals who are operating in India through foreign branches we call FRBs, foreign reinsurance branches. So as against 6 companies at that point of time, we are having now 68 companies, 68 entities in the insurance segment, so increase of more than 10 times. If we look at the amount of gross premium written in the year 2000-2001, the gross insurance premium written by the Indian insurers was to the tune of rupees 46,000 crores. Now, see the last year figures in 2019-20, the gross insurance premium written by the Indian insurance companies is more than 7 lakh crores. It was 7,62,000 crores. From 46,000 crores, it has reached 7,62,000 crores, increase of more than 15 times. You see how the sector has developed, how much tremendous growth the sector has seen after the opening of the insurance sector. Now, in addition to that, if we see the investments made by the insurers in the Indian capital markets, the total investments of all the insurance companies is more than 42 lakh crores. So it clearly indicates that the insurance industry has not only provided financial protection to the millions and millions of the policyholders against the insured events, against the insured risks, it has also provided jobs to the millions and millions of people. It has also provided substantial funds for the sustained long-term development of the country. It has provided funds for the infrastructure development of the country. So this is how it has happened over the period of time. Now, there is one interesting fact which distinguishes the life insurance industry in India from many countries of the world. If we see the global insurance premium, in the global insurance premium, around 55% of the premium is contributed by the non-life segment and 45% is contributed by the life segment. But what is the position in India? The position in India is entirely different. If I see the gross premium written by the life insurers in the year 2019-20, 75% of the premium came from the life insurance segment and 25% of the premium came from the non-life segment. I have just told you the total investments made by the life insurance companies and non-life insurance companies in India. Total investment is 42 lakh crores. Out of the 42 lakh crores, more than 38 lakh crores belong to the investments made by the life insurance companies. So the 95% of the fund is contributed by the life insurance companies. Around 7% of the fund is contributed by the non-life companies. Around 1.5% of the fund is contributed by the reinsurers. So here, life insurance premium is more. Contribution of the life insurance is more, and there is a reason for that. There is a reason for that because in India, the life insurance, anyway, and any insurance is more seen as a saving vehicle in addition to the risk cover. Okay? In other countries, it's purely risk. In India, I have seen the insurance marketing. I have been involved in insurance marketing for a few years. Whenever we used to go to meet the clients, the first question we used to encounter was that if I put 100 rupees here, how much I will get back after I survive on the date of maturity. So how much return I will get. So risk cover is already there, but along with the risk cover, the saving element is there. It's a long-term saving vehicle. So when you add the saving premium into the risk premium, the amount of premium increases. When the amount of premium increases, it happens only in life insurance. The contribution of life insurance in the insurance industry in the total premium collection is going to be more than the non-life, because non-life is purely risk, purely risk. If you look at the insurance policies we are having right now, all the participants can see, because we are all educated professionals, most of us will be having the life insurance policies. Most of our family members will also be having the life insurance policies. Many of us will be having the health insurance policies, either through our employers or through our own individual efforts. But rarely, very few of us would have thought of insuring our house, our property, our household goods against fire, against theft, against other natural calamities like floods, like earthquake, like tsunami. So this doesn't happen. We don't think in that way. We only think, you leave aside the mandatory part, which is the motor third party, where we are required to have our vehicles insured. Otherwise, there will be a police challan. Beyond that, we don't think of non-life insurance. We only think of life insurance. And in the life insurance, we only think how much money I'll get back if I survive at the particular time, if I survive up on the end of the term. So this is how the life insurance sector, the insurance sector operates in India. So based on this, when the sector was opened, before that, LIC of India was having all the plans which cater to the saving element. It was called endowment plans. Endowment plans in the participating segment. And what is the participating segment? We normally call it participating products. So what are those participating products? Where the policyholders participate in the profits of the company. Year and every year they get some bonus, and it is stable, smooth returns, safe returns, and they were preferring those, they were liking those. The most of the products sold by the LIC of India was in this segment only. Saving products in the participating segment, very negligible part in the term assurance. When I use the term assurance, it means it's a pure risk insurance. If the claim happens, only then the money will be paid. If the policyholder survives, nothing will be paid. That is the term assurance. Very negligible portion was sold towards the term assurance, and some focus was there on the pension and annuity segment. This was the position when the sector opened in the year 2000. When the private players started coming in, they concentrated more on ULIP policies. ULIP policies are called unit-linked insurance plans. What is the peculiar feature of unit-linked insurance plans? The peculiar feature is it has the possibility of high returns. These are market-linked returns, but the investment risk is borne by the policyholder. And moreover, the solvency requirements because of that are less. The capital requirements, solvency capital requirements are less in case of ULIP plans as compared to other plans. So most of the private insurance companies, when they started operations in India, they were selling only ULIP plans. And ULIP plans depend upon the performance of the market. Their marketing, their success, their sales depend upon the performance of the market. And the market was performing very well in 2002, 3, 4, 5, 6, 7, till the time in 2008 when the financial crisis happened. Subprime crisis happened. There was liquidity problem. There was flight of capital, and everybody at the capital markets were down. At that time, that the investment risk under these plans is borne by the policyholders, this harsh reality became known to the policyholders in a very adverse way, and many policyholders burned their fingers. There were a lot of complaints, and many regulatory interventions also happened during that period, and many conditions were brought for the insurance companies to have more disclosures, to have cap on charges, to have some reduction in yield requirements. So all these things came. So from 2008 onwards, because many policyholders have suffered losses in the unit-linked plans, the shift started happening. The shift started happening from the unit-linked plans to those plans where the guarantees are there. So policyholders started liking those products where some sort of guarantees provided at the outset. And these in insurance terminology are called non-participating plans, non-par plans. These are the plans where at the beginning itself, the policyholder knows how much money he's likely to get. He will get with certainty at the time of maturity. So these plans started to be sold by many insurance companies. So in addition to the participating business, in addition to the reducing ULIP business, there was some tendency to buy the non-participating guaranteed sort of business. In addition to that, in the year 2012-13, a new class appeared, and that class belonged to the young, educated Indians who are IT savvy and who wanted to buy the insurance products online. So at that time, most of the companies started offering insurance products online, and they wanted only those products where the premiums are less, and the premiums are less only in those products where the saving element is not there, where the term assurance is there. And at that time, web aggregators also started coming, and they started comparing the premiums of term insurance plans of many insurance companies. And this segment of term insurance or the protection business started to gain ground, and many companies started to offer these products on competitive terms. And we started getting many advertisements. Okay, 1 crore insurance at 10,000 rupees or 12,000 rupees. This was very low cost, high risk term insurance plans based on the reinsurance support many companies were offering at that time. In addition to that, considering the fact that the low strata of the population is not able to get the insurance protection, the government also offered many social welfare schemes in the form of Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, and these Jan Arogya Yojana. All these schemes, Atal Pension Yojana, from the government side, many insurers started offering, which helped spread the message of insurance, which helped protecting those who needed it most at that point of time. So this was the situation from 2000 to 2018-19 pre-COVID. When the pre-COVID happened, when the COVID happened, at that time, the fund of the insurance companies consisted mainly of participating plans. I've just told the total investment of the life insurance companies was 38 lakh crores. If we divide that 38 lakh crores, there 10% of the fund pertain to the ULIP policies, around 23% of the fund pertain to the pension and annuity policies, and balance fund pertain to the participating and non-participating policies. So this was the situation which was prevailing when the pandemic came to fore. So pandemic, we started experiencing the negative impacts or the fearful impacts of the pandemic in the year 2020 from January, February onwards. And the first casualty in the March 2020 was the investment markets. All over the world, the investment markets went down. So when the investment markets went down, India was no exception. All the capital markets were down. As of 31st March 2020, most of the companies reported huge unrealized losses on equity in their balance sheets, and this was seen by the regulator. And at that time, when everybody was very fearful about the unknown impacts, adverse impacts of the pandemic, it was feared that given the lot of restrictions on movements, given the fact that most of the offices are closed, it will be a major problem for the insurance company to sell the insurance. The new business premium will take a hit. It was expected. The renewal premium will take a hit. It was expected. How the investment markets will behave, it was not known. And there were many other factors, how the claims will be settled, how the policyholders will get their monies, their income will be affected. And there was one more thing, it was expected that most of the policyholders, given the situation, will not be able to renew their policies. There will be more policy lapses. These were all the expectations. It was all feared. So at that time, regulator came into picture and gave many extensions, many forbearances, and many relaxations to the insurance industry. And insurance industry backed by technology-driven initiatives, digital initiatives, very soon came out of all these negative impacts. After the initial 2-3 months of negative growths, the month on month, they started showing positive growths. Digitally, the policyholders were contacted, and IRDA also allowed the waiver of wet signatures on the proposal forms. In fact, the OTP authorizations and digital authorizations were accepted for the completion of the proposal forms. So, and along with these initiatives, the industry very soon came out of the negative impacts. In addition, suppose on 31st March 2020, when the markets were down, if anybody's ULIP policy is maturing on that day, the NAVs are down, that policyholder would have suffered. Then IRDA allowed the companies the extension of term for those policyholders who desire that, so that after some time, when the markets recover, at the time the NAVs have recovered, so the policyholders can get their maturity claims. So there were many relaxations, and insurers were asked to expedite the settlement of claims, to relax the requirement for submission of documents to the extent possible. All these activities helped the insuring public, and this pandemic also created some awareness in the minds of the public. At that point of time, IRDA came out with the introduction of many standard products like Corona Kavach, like Corona Rakshak, like Arogya Sanjeevani, like Saral Pension, like Saral Jeevan Bima. So all these products, the policyholders were told these are the standard products. The terms will be similar, same across all the companies, so they can safely buy these products because these are the design. This is the design which is similar with all the insurance companies. This helped create some confidence amongst the policyholders. And when we closed the year as on 31st March 2021, instead of the negative growth which was expected, which was feared, the industry closed with a positive growth. In the year 2020-21, the total premium collected was 7,62,000 crores, but in the latest year 2020-21, it has crossed 8,24,000 crore. So as compared with the previous year, there has been a growth of around 10% in the life insurance industry's total return premium, and there has been a growth of around 5% in the non-life insurance industry's return premium. And just I have told, there are now 68 insurance companies or insurance entities operating in India, and this includes 2 specialized insurers also. One is the Agriculture Insurance Corporation of India, which was not there at the time of opening up of insurance sector, and one is the ECGC, which is there for the export guarantee sort of thing insurances. These 2 specialized insurers are also there. The total premium is now 8,24,000 crores, which shows a growth over the premium return in the last year. So overall, there has been a positive growth in the premium return, and this confirms the fact that the insurance awareness has increased during the pandemic time. And one fear I told you was that many policyholders won't be able to revive their policies, won't be able to renew their policies. Actually, now when the air is closed, we see many insurance companies are reporting the improvement in their persistency ratios. It means more policyholders have revived their policies. Even the policies which were lapsed in the previous duration have been revived. And then improvement in persistency, in spite of perceived reduction in the incomes, is a pointer to the fact that the awareness of the insurance amongst the population has increased tremendously. Now, we are yet to receive the annual returns because most of the companies are in the process of closing their annual accounts, getting it audited, getting it approved from the board, and this process is going on. Once we receive the reports, we will be able to find out what impact this pandemic has on the expenses, considering the fact that most of the operations have been conducted from home. The offices were closed, whether this has helped in the reduction of operating expenses or the cost of operations. If it has happened like that, then it will pave the way of things to come in future, whether the companies would like to operate from the outside offices or they would like their employees to operate from their homes, if it leads to reduction in their cost, if it leads to reduction in their expenses. This is one fact. Second, one thing was expected, because of this COVID, the claims will be more. Number of death claims will be more, and number of mediclaims and hospitalization, amount of hospitalization claims will be more. And this has actually happened. So when actuarially at the end of the year, when the actuary in an insurance company estimates the liabilities, estimates how much assets should be there to back these liabilities, he instead, in addition to the best estimate assumptions, he adds some margin for adverse deviation. That margin for adverse deviation is for the purpose of taking care of the adverse circumstances. So that margin of adverse deviation will help the insurance companies to compare or to neutralize these additional claims. But what will happen is when they make again reserves for the next year, as on 31st March 2021, these margins will have to create it additionally. So it will put a pressure on the capital. Since it is going to put a pressure on the capital, the government has already increased the FDI limit. I told you it was 26% in 2000. Now it is 76 or 74%. So that FDI limit has also been increased. In addition, the number of claims in death claims are more, okay, but the number of hospitalization claims due to COVID is much more. But it has also created one new fact. The hospitalization claims because of other diseases because of other surgeries are less. To some extent, that cost is neutralized. What is the exact impact that will be knowing after the annual returns are filed? So this will be the position up to 31st March. But unfortunately, the adverse impact of second wave have come in April and May and in this quarter. So this will be known in this year how the situation develops. But thankfully now it is on the wane, and hopefully in future when the vaccination drive is also gaining its momentum, the economy will rebound. The way the capital markets have bounced back, all these things will very soon come back to the normal. So this is going to be the situation in future. All those companies which have simplified their claim processes, all those companies which have helped the policyholders in smooth processing of claims and dispersed claims without any difficulties, all those companies will be able to consolidate their marketing position and will be able to spread, will be able to get more business from the market. And there is going to be a perceptible shift in the consumer preferences. Consumers are more likely to demand the term assurances now. Consumers are more likely to demand the health insurance now. Consumers are more likely to demand the pension segment now. Now, this is one segment, because when one loses the regular source of income, then he looks upon his savings. And pension is a segment where the regular monthly savings are provided, and it's the insurance companies only which are providing the annuity plans, which give the annuity for the entire life. So these plans are available. So a lot of work is happening on this segment also, because just now I've told 23% of the fund of the investments of life insurance companies pertain to pension and annuity segment, and most of its part is coming from the organized sector through group superannuation plans, through group terminal benefits plans, through group gratuity plans. And this sector will also see, this area will also see a lot of development in the times to come. So at this point of time, though we have done a lot of things, there has been a tremendous growth also, but still a lot needs to be done. If we see the global insurance premium and the share of the Indian insurance premium in the global insurance premium, it is just 1.68%. It's just 1.68%. If we see the insurance penetration, now what we mean by insurance penetration? Insurance penetration is the insurance premium as a percentage to GDP. So insurance penetration in India is just 3.76%, whereas global average is more than 7%. When you see insurance density, what is insurance density? Insurance density is the insurance premium per capita. Insurance density in India is just $78. Whereas many countries in the world are there where it is more than 400, 500. Many countries. In Malaysia, it is 500 plus. In China, it is 400 plus. It's Mauritius, it's around 400. So insurance density, insurance penetration, it has to be improved. There is a lot of potential. So to have this potential into our folds, there's a lot of things which the institute can do. There's a lot of things which the professionals can do, and we have to work in a way that all the uninsured are insured. We have to work in a way that all the unprotected are protected with the financial protection schemes made available by various insurance companies, made available by the social welfare scheme of the government of India. So this becomes our duty. So I'll not take much time. I think the time allotted to me is already over. So once again, I thank you very much for giving this opportunity to be associated with you. And it is a sense of a reunion with me that I have again become a member, I became an active member of the Institute. Thank you very much. Thank you for bearing with me. I have thrown a lot of figures upon you because now I feel that it's very difficult to comprehend all those figures, but evolution of industry without the figures and without the data would have been meaningless. So that was required for this purpose. So again, once again, thanks very much for this opportunity.
Thank you, sir. Thank you, sir. It's a really great session for us. You have unfolded various areas for our, how the insurance industry is looming large in this very difficult situation. Sir, just for your information, our institute from the BFSI board, we are going to have a course for not for only cost accountants, but for other people, so that everybody can ensure that they are all educated with insurance matter, because it is required of the day. It is a requirement of the day. Considering this, we are going to have a level 1, level 2, level 3 courses, which should be in association with the National Insurance Academy will be holding, sir. And sir, we'll be looking forward for your presence there also, so that other people, other students, those who will be participants, they can feel inspired. And sir, we are continuously putting our all sort of members' views when we are receiving any suggestions you require from the public. We are also participating with RDI. We are giving our suggestions, so that ultimately in various fronts of issues we have already done. And we are looking for also various concept notes on insurance, which will be coming very shortly from BFSIB. We'll be doing it, sir. And I look forward for your continuous guidance and advice on this course, sir. Thank you for your beautiful deliberations. Sir, now I'll be requesting our Indakshi Bhattacharya to start this program, because our very learned speakers are here, sir. They will be definitely putting their very valuable remarks. Thank you.
Thank you, sir. Thank you so much, sir, for detailing the concept of insurance sector pre and post COVID-19. We are having with us guests of honor, CMA G. Vaidyanathan, Chief Financial Officer, Shriram Life Insurance, and CMA Delzad D. Jivasha, Associate Vice President, Risk Management, ICICI Lombard General Insurance Company Limited. CMA G. Vaidyanathan has been associated with Shriram Life Insurance Company Limited since November 2006. He was CFO from 2008 until early 2021. Presently, he is engaged with the company as advisor. Prior experience covers manufacturing, services, and project companies. He has total experience of over 40 years. He is BCom from Madras University. He is a member of the Institute of Cost Accountants of India and member of the Institute of Company Secretaries of India. CMA Delzad D. Jivasha is a member of the Institute of Cost Accountants of India, member of the Institute of Chartered Accountants of India, and also member of the Institute of Company Secretaries of India. Presently, Mr. Jivasha is with ICICI Lombard General Insurance Company Limited, a leading private sector general insurance company in India, and is the lead for driving various pioneering, diverse, and challenging practices in the enterprise risk management function of ICICI Lombard. Prior to ICICI Lombard, Mr. Jivasha was head finance and compliance and used to head the finance and compliance function of the Forbes professional business line of Eureka Forbes Limited. Mr. Jivasha is also on the strategic advisory board of the Institute of Risk Management of UK India affiliate. Now I will request CMA Shiva Prasad Padhi sir, former chairman EIRC ICEI, to continue with the session. CMA Shiva Prasad Padhi sir has done his Masters in Commerce as well as Masters in Business Administration in Finance area. He is a fellow member of the Institute of Cost Accountants of India, Insurance Institute of India, and Indian Institute of Insurance Surveyors and Loss Assessors. He is former Dean Academics of IMIS Bhubaneswar and offered papers as a visiting faculty at XIMB, IMIS Xavier University, Goa Institute of Management, etc. He is currently practicing as a cost accountant based at Bhubaneswar, Odisha. He is pursuing his doctoral degree from Fakir Mohan University, Balashore, Odisha, on efficacy of claims management in general insurance industry. Now I will request Shiva Prasad Padhi sir to navigate the session further. Padhi sir, over to you, sir. I think Shiva Prasad Padhi sir is having certain technical glitches.
I request K2 Murthy to continue the program so that when Paddy joins, Paddy can continue. Murthy sir, you can take the lead.
I think I am hearing some voice. Okay. Then stepping into the shoes of navigator, time being, Good evening to all of you. Without wasting much of my time of my past accountants, may I request Sri Vaidyanathan sir to enlighten us about the insurance and everything.
Good evening to everybody. Respected, am I audible, sir?
Yes, sir. Yes.
Thank you. Respected dignitaries of the CMA Institute, fellow members and students of the Institute who may be listening to this program, warm good evening to all of you. And I hope that you are keeping well during this pandemic. And it's very critical to take sufficient care, because every now and then we get some news that something untoward has happened, sometimes to many members of the same family, which probably instead of taking it lightly, I think we should treat the pandemic as something which we should respect and not fall a prey to it. On a different note, the more the virus is allowed to get a host and mutate, the more problems it will create. So by taking necessary precautions, I think we are helping in the containment of the pandemic also. Now I'll just share a small presentation if my technical skills work. Because I haven't used Google Meet extensively. I'm not sure if my screen is visible, sir.
So not visible, sir.
Is it now visible, sir?
No, not sir, not sir. Now it started.
Yes, sir. Yes, sir. Yes, visible. Visible.
Okay. I think the predecessor, the previous speaker, respected Mr. Arora, he is a veteran of the insurance industry, and I think he has covered most of the topic. So to speak after his presentation, I think it's a challenge in itself, sir. So thank you, Arora Saab, for the very comprehensive and very detailed insights you have given into the insurance business. So my presentation will largely cover life insurance industry, sir, and there may be some amount of repetition from what Mr. Arora has presented. So I think this Mr. Arora had largely covered most of this. If you look at the current insurance market, there are 24 private and 4 public players in the non-life segment, and 23 private and 1 public player in the life segment. So there's a concept called new business that is especially relevant in life insurance industry, which looks at the number of new policies that have been sold to the customers, which will be if it's a recurring premium paying plan, it will result in premium payments for whatever period the plan calls for. So that number for the life insurance business last year was 2.78 lakh crores, which was a growth of around 7%. And if you look at the total premium, including renewal premiums, the growth was, more than 10%. To understand the size of the life insurance market, like Mr. Arora said, there are so many numbers that it's difficult to, remember most of the things. So hopefully with the presentation, the numbers may register better. The life insurance industry has around 11,000 branches, and the number of people who are engaged as agents is more than 24 lakh people. The number of employees in life insurance companies is more than 3 lakhs. And the number of in-force policies is 32.47 crores. An in-force policy means a policy which is live where the cover is still given to the customers. That means premium payments are up to date. The amount of capital invested by the promoters of the life insurance companies is more than 38,000 crores. And like Mr. Arora mentioned, the total investment which the life insurers, and of course LIC is the major player in this, the life insurance companies have almost 45 lakh crores of managed assets. And the contribution to the infrastructure sector in terms of investment is more than 4 lakh crores. It's 4.4 lakh crores. So this gives some idea of the size of the sector. So if you want to see how it has evolved, I think again, there may be a bit of a repetition. So the life insurance industry pre-1956, there were more than 200 players. And in 1956, all the life insurers were nationalized and brought under the single umbrella of LIC. Then 2000 was a watershed year where the authority was set up and privatization was rolled out. 2005 to 2010 was a period where there was increasing awareness and the insurance premiums grew fairly significantly. Then in 2011, like Mr. Arora said, post the subprime lending crisis, there was a lot of regulations related to ULIPs. So post 2010 and 2011, there were many, shall we say, revamping or tweaking which was done for the ULIP plans so that the customer returns are better protected and they are made more aware of the risks in the ULIP policies. And there was some amount of shift during this period from sale of ULIP policies to sale of traditional plans, whether it is participating or non-participating. When the industry was opened up, the the foreign direct investment or foreign investment which was allowed was 26%. In 2014, the FDI limit was raised to 49%. And the government understood or laid a lot of emphasis on insurance and promoted many insurance plans. And in fact, the government has been a kind of a promoter for life and general insurance, making people aware of how insurance can help them with their lives. Here it would not be out of place to mention that the economic disruptions caused by the risks which insurers cover is tremendous. So if you take life insurance, if the earning member of the family, God forbid, something happens to him, then the economic condition of the surviving members of the family becomes very, very difficult. If the person has had the foresight and taken life insurance, it would go a long way in mitigating the economic hardships. Nothing can replace the person who is gone, but at least the economic pain can be reduced to a great extent. Otherwise, the lifestyle change for people who are in families which are impacted by the untimely death of the breadwinner is something which is very, very hard to imagine. And somehow the, shall we say, except in maybe in the last 2 years or 3 years, the importance of taking life insurance is not always widely understood, even by people who are fairly, shall we say, otherwise well educated and understand things. Somehow there's a reluctance in the mind to accept our own mortality, if I may say so. And I think there the government's initiatives of launching many programs have really spread the message of insurance in the last few years. And like Mr. Arora Saab said, recently in this calendar year, the FDI limit has been raised again from 49% to 74%. We may wonder what is the significance of increasing the FDI. It is just that insurance requires a lot of capital to be deployed. In the previous slide, we had seen that almost 38,000 crores is the share capital of the life insurers. So beyond a point, a kind of fatigue sets in. So the increase in the FDI limit will help attract more capital and keep the business more robust. So coming to the second part of the slide, it gives a quick snapshot. In 2001, the life insurance new business premium was around 9,700 crores. It has grown to 38, almost 39,000 crores by 2006, and 1,20,000 crores by 2011, and 1,38,000 crores by 2016, and now it is sitting at 2.75 or 2.78 lakhs. So that's in a brief the growth of the life insurance sector. And Mr. Arora also alluded to the assets under management. In 2001, it was 1.94 lakh crores and has grown steadily to reach 38.9 lakh crores in 2020. Now, what is the purpose of life insurance? It is to pay out claims. In very simple language, the life insurance company collects the premiums to make the payout when the risk event or the maturity of the plan happens. So in 2008, there were some 7 lakh claims paid out, amounting to 5,288 crores. And by 2020, the number of claims was 18.44 lakhs, and the total payout was about 30,000 crores. That's a factor of almost 6. While the premium size has increased, we should also remember that we are a large country with significant growth in GDP over the years. So strangely, while the premiums have grown, the insurance penetration is actually not at its peak. It grew from 2.15% to 5.1% in 2010, and it has now hovering around the 3% mark. In 2019, it was 2.82%. And the chart on the left shows you the insurance penetration of various countries. The world average is 3.35%, and we are at 2.82%. But as compared to the more developed countries, we are probably at 40% or 50% of it. We should also remember that the social security plans in India are are less, and therefore the need for life insurance is more in a country like India. I'm aware that I'm probably, overstepping my time, so I'll just go a little more quickly, just to understand the potential of this life insurance business. We have a large undercovered or underinsured population. And in one of the seminars, one of the dignitaries from IRDA mentioned that the protection gap is a 480 lakh crores. That's a huge mind-boggling number. So the industry has a huge potential to grow, and considering that the need for insurance is very, very high, we are sure that this sector will have a lot of attention or focus from the government, so that this protection gap can be reduced and the insurance industry steps up to provide the necessary coverage, which means the industry will also grow much, much larger. What was the impact of the pandemic? I think Mr. Arora has covered most of it. So most of the companies made good use of the relaxations and the facilitating or enabling provisions which the regulatory authority, IRDAI, allowed us to use in the year 20 and 21. A lot of adoption of digital technology was there, and a larger way of non-contact way of doing business by using electronic apps, online facilities. This is not only for new business, for policy servicing also, which is very, very important, for registering of claims. I think most private sector players have made a technological leap. So instead of going to the branch, the person could do it on his laptop or mobile from his home itself. Now, as far as the focus on insurance is concerned, earlier insurance was a push product. Nobody would talk about taking life insurance, but the last 1 year, the attitude towards life insurance has changed, like Mr. Arora mentioned. The number of the new policies taken also increased, and the payment of renewal premiums saw a fair uptick. So people have become more aware. So hopefully, that memory will last for some time, and people will understand the significance of taking life insurance. And the regulator as well as the companies have understood that in order to make this offering more valuable to the customer, there should be more focus on customer value and benefits. And just as another statistic, as per the Life Insurance Council, the life insurers have paid almost 2,000 crores towards the COVID claims in the year 2020. Emerging trends in life insurance industry. I think Mr. Arora has very effectively covered this. New distribution models are coming, where people are using technology to reach out to the customer and a lot of data analytics, and then strategic partnerships and insurtech. And a lot of innovation is taking place in the product space and in the working styles, so that better customer value can be delivered. New technologies are also being constantly scanned to see how this journey can be made better. Use of internet, voice analytics, underwriting, and things like that. And the regulator has really helped us, because they understand that if you have to insure such a vast and diverse population, it is necessary to come up with innovations which were probably earlier not required when more sedate growth was all right. So now they have introduced something called a sandbox, where an insurer can approach the regulator to try out an innovation as a pilot for a particular period of time. They have also introduced standardized products, like you mentioned, which would enable customers to understand the insurance offering much better. So I think as far as CMA professionals are concerned, they have three major areas. One, to promote insurance as a concept among their clientele base in whatever way is possible. And then working with the regulator to get the areas where they can contribute to supervision and better improved efficiencies for the insurance companies. And the third is to get into a life insurance company and contribute towards more effective and efficient running of the insurance companies. I think I've really overstepped at time. Apologies. Thank you very much.
Thank you very much, Mr. G. Vaidyanathan, sir. It was really nice hearing from you. In fact, I will now request the other guest of honor of this evening to please take 20 minutes to present his perspective. CMA Deljad D. Jivasa, Associate Vice President Risk Management, ICICI Lombard GIC Limited. Sir, please.
Thank you very much, Mr. Shivapati, Mr. Murthy, Mr. Chitranjan Chattopadhyay, Mr. Raju Iyer, the Institute of Cost Accountants of India, for having given me this opportunity to come here and share my thoughts. Before I proceed ahead, I would request all stakeholders who are not speaking to please put themselves on mute, as I believe I can see some bit of noise coming in the background. So thank you very much. You can put yourself on mute. Thank you. COVID-19 pandemic has impacted the world economy and its citizens in absolutely unprecedented ways. Before I proceed ahead on that, I believe the Committee for Banking and Insurance, I've shared a presentation. I would request somebody from the committee, I think maybe Mr. Dibendu Roy, to please share the screen and the presentation. Thank you, Dibendu. And yes, that's the first thing in life that we always say, that you cannot discover new oceans unless you have courage to lose sight of the shore. And yes, that is pretty much what the insurance industry also symbolizes. It's not about telling you not to take risk. It's about telling you that at every single point in time, you need to take informed decisions regarding your risk. Let's move to the next slide. I think we've skipped one slide, the earlier slide. Yes, we can be here on this slide. Let's minimize it a little. Yes, excellent. That's fine. The COVID-19 pandemic, we can stay on that slide, please. Yes, thank you. On the second one, yes. Yes, we can stay there. So the COVID-19 pandemic has impacted the world economy and its citizens, like I mentioned, in unprecedented ways. It is highly unlikely that in 2019, anybody would have predicted the way 2020 and 2021 will pan out. It only reinforces what has always been said, that we live in a VUCA world. That is a world which is characterized by volatility, uncertainty, complexity, and ambiguity. The pandemic has virtually changed everything. Business plans conceptualized have been revisited. Economies have suffered, some more than the others. Trade and commerce activities have been impacted in a very, very big way, with certain industries facing the potential threat of unsustainable losses. People's perception about risk management and future planning has undergone a paradigm shift. Not to forget, the perception about life as a whole has undergone a change. It is common to believe that in a few decades from now, the letters BC could very well be interpreted to mean before Corona. Yes. Talk about somebody 2 decades from now. How will he interpret the word BC? I have no doubt in my mind that it's going to be interpreted as before Corona. But the moot question is why? The answer to that is again because the pandemic has changed everything. Right from the way business is done to the methodology of conducting operations. And not to forget, the reinforcement of a known fact in all the business circles. Technology prowess will have the potential of being a complete game changer. With these thoughts, I also want to take this opportunity to compliment the BFSI committee of ICMAI for having taken the fantastic initiative of having June 21 as an insurance month, and indeed picking up a very important, vital topic on how the insurance industry will evolve in a post-COVID-19 pandemic world. Why is this important, ladies and gentlemen? Because what was normal before the pandemic could very well end up becoming extinct after the pandemic. And what the world is certain to see is a new normal, particularly in the professional workspace. Let's go on to the next slide, which talks about the agenda. Yes. So when we talk about the agenda, what I do plan to cover in the next 15-20 minutes is the evolution of India's non-life insurance sector in the pandemic era. In the non-life space, we have got 4 critical aspects of business. First, the sourcing element. Right from the time you obtain the insurance policy. Second, how will you service the customer at the time of obtaining the policy as well as post the policy being purchased? Third, and very important, how will you manage the claims? And fourth, what are the employee-related work aspects? Before I proceed on to all of this, I think we as the insurance industry have one person important to thank. And that person indeed today is IRDAI, or the insurance regulator. Why is that? The reason for that is very simple. It is primarily driven by the fact that the regulator has played a very key role in ensuring ease of business and making laws and regulations which have assisted the insurance companies in managing the business. So I think all of us have, as insurance companies, can take this opportunity to thank IRDAI for all the fantastic initiatives that they have taken amidst these tough times. And we are truly blessed and privileged to have Mr. Arora with us on today's webinar. So let me go on to the next slide. Let's go on to the next slide, where we begin by talking about the entire sourcing element. And so we can see that technology would have influenced all of these aspects in a very big way, be it sourcing, customer service, claims management, or employee-related work aspects. Technology has been the real game changer, and it will continue to be the game changer even in a post-COVID era, where we are today seeing a new normal, which we would never have thought. You know, in our life, we are very used to people asking us, where do you see yourself 5 years from now? I'm sure if anybody would have asked us this question in either 2015 or 2016, would we ever have said that we see ourselves working from home, and that too for a period of 1.5 years? It's highly unlikely. Would we ever have said that we are now going to be doing everything sitting in the convenience of our homes? The answer is no. But technology played a major role in successful management of these areas during the pandemic. And technology will continue to play a big part. Let's move on to the next slide. Yes. So when we talk about sourcing of business, which is the first important element in a non-life business, sourcing is being undertaken through leveraging technology and various digital channels. Customers are being sensitized on different products being offered by companies, including utilizing the digital platform to reach out to more and more customers. We saw Mr. Arora give some fantastic statistics on the growth of premium. Again, the technological platforms being used and the digital premium payment options being used has enabled the insurance companies to reach out to more and more people. It has been witnessed that the non-life players have proactively reached out to their customers through various digital channels during the pandemic outbreak and through telecalling for renewal of various insurance policies. Another important sourcing feature observed was involving intimating customers and sending them website links to facilitate purchase of insurance policies, thereby enhancing the overall customer experience. I have one very interesting statistic to give all of y'all today. When a survey was conducted of the digital insurer, it is quite pertinent to note that 57% of customers stated that they place convenience of insurance purchase ahead of everything. Yes, ladies and gentlemen, can you imagine the number 57%? Wherein if insurance purchase is not easy and not easily available, they are happy to move to another insurance player who is providing this convenience of purchase more easily. This is where sourcing has undergone a paradigm shift in the pandemic era. Technology was always very important, make no bones about it, but it has been reinforced in the pandemic era. Another important aspect for all of y'all, apps or applications which have been developed by companies ensure that a diverse spectrum of insurance services are made easier and full of convenience for all the customers. Let me give you all a classic example. I'm sure all of y'all have got a motor insurance policy. Typically, where there is a break between the end date of a policy and the commencement date of another cover. So there is basically a gap between two insurance covers. Break-in inspection was mandatory in motor insurance. What is break-in inspection? Where a company representative visits the customer, undertakes a complete survey of the vehicle, and gives a certification that the insurance can be undertaken. For a moment, please think and ask yourselves one question. With a lockdown being imposed, with movement restrictions being there, how will the insurance representative visit the customer and carry out the break-in inspection? Ponder over this for 10 seconds. Again, the answer to that was the functionality of self-inspection being built in through the app, wherein customers can take the entire video of their vehicle and upload it on the app. On a real-time basis, your executive will carry out the self-inspection. He will certify it if everything is okay. And there you have your insurance policy in your inbox within no time in certain clear cases. So the app has been leveraged extensively to carry out self-inspection by customers and issue policies. I'm sure all of y'all during this pandemic appreciate the importance of health insurance. We spoke about motor insurance, let's go to health insurance. Certain apps have been conceptualized by non-life insurance players, which offers a broad spectrum of solutions in health insurance, including the facility, yes, including the facility of giving a call to a doctor and obtaining medical advice. Even that has been activated through the app. a very important component of sourcing involves business generation through intermediaries, because intermediaries are again very important stakeholders in the non-life business. So you have got a situation that your channel partners have been trained and sensitized through proactive training programs being conducted by non-life insurance companies with respect to educating your intermediaries, giving them access to technology platforms in such a way that at the click of a mouse, they can load all the details of the customer and issue the policies to the customer. Various education material on do's and don'ts related to COVID-19 have been shared with customers and have been shared with intermediaries through technology platforms. And again, you have a situation where onboarding of agents and intermediaries, including the point of sale channel, has been extensively leveraged through ensuring that onboarding is carried out through technology platforms. So you can see that how sourcing has undergone a paradigm shift, with technology playing a big role in sourcing of insurance policies. In time to come, again, in a new normal world post-COVID-19, technology will play a core strategic role in sourcing business. Let's go to the next slide, which is the second element, which talks about customer service management. Customer service is again of foremost importance. Again, the non-life sector has always endeavored to ensure that it delivers well on various parameters of customer service. To give an example, in the earlier part, we covered motor, we covered health. Let's now look at another important case study, which is corporate insurance, which is offered by the non-life sector, which is insurance solutions to corporates. With respect to insurance provided to corporate customers, it is very common to see a risk inspection being undertaken prior to a decision being made on terms and conditions and feasibility of insurance. So you have an engineer who's visiting the factory of the corporate customer, carrying out a complete risk inspection, and thereafter deciding whether an insurance policy should be offered to that customer. And if it is offered, what are the terms and conditions at which it should be offered? This is important for two reasons. This is where things get interesting, ladies and gentlemen. It's not just important for an insurance company, because it helps a company to decide what risks to underwrite and what risks not to underwrite. It is equally important because the risk inspection is offering solutions to the customer on what are the steps they can undertake to ensure that losses are minimized. This is the big paradigm shift. It's not just about indemnifying customer when they suffer a loss. No, that day and era has gone. It's about helping customers to minimize losses, because losses, when they happen, to some extent, it derails your business. So if you have to build a strong balance sheet, it's important to minimize and avoid losses. And this is where customer service has undergone a paradigm shift, with insurance players guiding customers on minimizing losses. So this is offered by non-life companies as a value-added service under customer service management category. Again, if there is a lockdown, if movement is restricted, how will the insurance company representative go to the factory of the corporate customer? How? That is my question. This is where live video streaming has played a big part, through live video streaming being carried out of the factory premises through technology platforms, and thereafter customer service being rendered. We have all heard of fire incidents happening. Have you all ever pondered over that? Why does a fire incident happen? Why did a fire happen? It basically happened because of a fluctuation in the electric current. So you see many companies having a fire extinguisher. But if the required pressure levels are not there in the fire extinguisher, what happens then? The fire extinguisher will not work when you want it to work the most, with the result that your fire is going to have a big impact. This is where, ladies and gentlemen, and all the dignitaries who are attending today's session, the Internet of Things, or IoT devices as we call them, plays a big part, wherein IoT devices send a trigger to the factory manager when the pressure level goes down, so that accordingly you can know whether your fire extinguisher is effective or not, and whether there is a need for you to replace it. This is customer service management in its purest sense, when you render that customer service to customers through Internet of Things. Let me again give another example. Say, for example, a shipment had to move from point A to point B. In the course of that shipment, the customer suffered a loss. Why? Because there was a pilferage during the transit. Now, through value-added services under customer service, you can institute a process wherein you can install GPRS trackers in such a way that whenever your vehicle will take any detour, immediately it will get flagged off. So the sector in a post-pandemic era has evolved from being an insurance provider to being a risk management solutions partner. Not to forget, technology tools are being utilized by companies for servicing customers. If there's any customer query, be it policy cancellation, be it policy renewal, be it customer endorsements, the technology tool will help to track the entire cycle of serving the customer, resolving the customer complaints within defined timeliness. And where the customer query is not resolved within a specific time, immediately escalation happens, because the tracking happens on a real-time basis through technology platforms. Now comes a very interesting segment. 5 years ago, if anybody would have told you that in certain cases, within a matter of minutes of a transaction commencement, you will have a policy with you, would you ever have believed that? It was very used to policies being received within maybe 2 weeks or 1 month or even more in certain cases. Now, because of chatbots being used, chatbots or artificial intelligence as we call it, quotes are being released within minutes in certain cases. So you are a customer today of insurance. Imagine a situation if I was to tell you that in certain cases within few minutes, you will have a quotation in your inbox, and if you accept it, again thereafter in few minutes, you will have a policy in your inbox. What would you say to that? Or what would you think to that? This is where technology has been harnessed, has been leveraged to ensure that you render effective customer service through artificial intelligence and chatbots. Again, as I mentioned earlier, you have your service quality dashboards and trackers, which have been created by non-life companies to measure levels of customer service. So in a post-COVID-19 world, you can see how technology was leveraged for customer service. Let's move to the next slide. Moving on to the third important segment, which is claims management. Again, very well touched upon by Mr. Arora. Again, I would like to place on record our appreciation of IRDAI and all the regulations they introduced, which made settling of claims easier amidst these tough times, which require prompt settlement of claims. In certain scenarios, the entire claim process was automated with documentation, approvals, surveys, and all related aspects of claims being brought on a digital platform. Let me give you an example of health insurance, which is the flavor of the season. In certain cases, it was observed that network hospitals empaneled with a general insurance company could submit claim documents in a soft copy form when submission of documents in hard copy was difficult. With services being suspended, lockdowns being imposed, how would you submit hard copies of claim document? That is why document submission was made online through leveraging technology. And in certain cases, even where apps were developed by insurance companies, you could in certain cases even upload the documents on the app, and the insurance company would take note of that and would look at settling the claims cases. Again, in place of hard copies wherever possible, soft copies were accepted to ensure that claim processing was smoothly and effectively undertaken. So again, even the network hospitals were submitting documents in soft copy forms and claims were getting processed. Customers and channel partners were requested to share soft copies, including AML, KYC, and fund transfer documents being accepted from the registered email ID of customers, wherever feasible, after ensuring compliance to all the applicable laws and regulations. So what we realize is that where earlier submission of hard copy was required, through further strengthening technology platforms, through further developing apps, there was ease of convenience for the customers and channel partners. You didn't have to give your documents to the courier office. You didn't have to travel to submit claim documents. All you needed to do was submit the claims in a soft copy form in certain cases, and claims management was made faster, more efficient, and quicker. I'm sure, so what I just spoke on was again important from a health insurance, from a motor insurance, and from a corporate insurance standpoint. Let me now bring another important dimension of claims to you all. In non-life insurance, it's very common that before a claim is settled, a surveyor has to visit the customer premises, assess the loss. A qualified and technically competent surveyor has to visit the premise, assess the loss, and submit a report to the insurance company after carrying out an inspection of the site, particularly in case of corporate customers. So non-life companies have to appoint a surveyor. Again, my question to all of you all, if there is a lockdown and a surveyor cannot visit the site, how will he carry out the inspection? How will he submit the report? And above all, how will the claim settlement happen? These are challenging times, ladies and gentlemen. But as they say, necessity is the mother of invention. And the non-life sector has successfully adapted to this norm and has accordingly made sure that solutions are devised. How have we ensured that? The general insurance sector, amongst others, is giving cognizance to appointing surveyors who possess the required technological tools in such a way that you can undertake virtual surveys of the loss site, assess the quantum of loss wherever required and necessitated, and accordingly look to settle the claim in certain defined cases. So again, non-life companies have looked to leverage on technology to generate system-driven reports also to improve the service levels of customers and bring on board the right set of partners who have the required technology capabilities. In the space of claims management also, the influence of technology will be there to stay in the new normal, which will be seen in the post-COVID-19 era. So at all points in time, be it sourcing, be it customer service management, be it claims, what you will continue to see is more and more processes being brought on the digital platform, more and more effective services being rendered, and at a much quicker and faster pace. This is where technology will continue to play a big role in the post-COVID-19 new normal that we are seeing. Let's move to the next slide. And finally, coming on to the fourth and important segment. How many of us would have ever thought that no offices in India would be operational? What about employee-related work aspects? If we are not allowed to visit offices and carry out our work from office, how do you think that employees would be in a position to render the required levels of service? And how would employees carry out their work activities? So technology has had a major influence on employee-related work aspects, because during the pandemic outbreak, several offices were not open. So you had to work from home, or WFH, as is more popularly known in today's times. But how did WFH become a possibility? Was it simple? The answer is no. It became a possibility because of technological prowess. Meetings with internal and external stakeholders in the workplace started being undertaken on the online technology platforms and through video conferencing, which goes a long way in minimizing travel cost and time for companies. Today is a very good example where your Institute of Cost Accountants of India took sublime initiative to organize this webinar on a technology platform and disseminate information and value addition to all the CMA members. Again, a very good example of how technology is being leveraged. So this technology prowess has enabled employees of various companies to undertake activities from home, keeping in mind the lockdown which was enforced as a result of the pandemic. And this ensured safety of employees and their families. We do understand and know the risk which was faced stepping out of the house. So the non-life companies have endeavored to closely monitor the service levels also in a work from home environment. And many companies, many non-life companies will actually now be moving to a hybrid approach even after the pandemic is over. And we hope and pray that it ends soon. Even after the pandemic is over, you will see a new normal where employees will continue to work from home maybe 50% of the time. And in certain cases, maybe even 100% of the time. Again, did we ever think of something like this few years earlier? The answer is no. But it happened. And that is why we say that Corona has indeed changed the paradigm of business. Training programs are being undertaken to harness the benefit of technology, and employees are undergoing training programs on a technology platform. Again, certain non-life companies have even organized digital wellness sessions for the employees, including circulating educational material to all employees in a work from home environment on how to be safe and how to enhance productivity. All the core applications for carrying out the work have been brought on a technology platform, be it policy booking, claim settlement, everything has been brought on a technology platform in a work from home environment, such that today we have not faced any issues and we are not facing any issues and continue to operate smoothly even in a work from home environment. In such cases, even when we talk about cyber security, the do's and don'ts of cyber security were rolled out to employees to ensure that critical data is protected at all points in time, particularly where all applications were brought on a technology platform. Therefore, in the new normal, in the post-COVID-19 era, we will continue to see the technology function playing a big role in all employee-related work aspects. Let's go to the next slide. So, ladies and gentlemen, we've covered all the 4 important aspects about what we saw in the non-life sector pre-COVID and post-COVID. Apologies that I have overshot my time by a few minutes, but what I just want to end by saying is that companies came, companies went. But if you saw one thing common that was amongst all your market leaders who have continued to maintain their supremacy position, the one common thing is that they planned out for business continuity and enterprise risk management beforehand. And they adequately leveraged on technological superiority, because technological superiority will continue to play a pivotal role in sustaining market leadership position. That day and age is gone, that where we can wait for a thing to go wrong before it actually goes wrong, because you cannot prepare for a war during a war. You have to plan before, because during war, the time is to execute. You cannot spend time planning there. Are we prepared for another pandemic? This is what we need to ask ourselves. We hope and pray that this pandemic ends soon and the world never sees what it saw. But at the same time, the need of the hour is going back and thinking that what can we do better and continue rendering service effectively to all our stakeholders, including our shareholders. Let's go to the last slide. So once again, as we say in risk management, a thing that I have learned from my parents since I was a kid, that first, prioritize the welfare of all your stakeholders and do good to all your stakeholders. Because when you ensure that the party whom you're dealing with will not lose, even you will continue to win at all points in time. Ladies and gentlemen, thank you very much for your time. And thank you very much for your patient listening and for a great webinar organized by the Institute of Cost Accountants of India, including the efforts of the BFSI committee, Mr. Chatterjee. Thank you. Thank you very much.
Thank you very much, Mr. Delja D. Jivasa, sir, for your lucid and elaborate discussion on non-life insurance sector in particular. We are very close to our timing of closing the session. In fact, I will just take a couple of minutes to summarize the address made by our own Sri P.K. Arora, sir, member actuary of IRDAI. Before actually I put a few questions to Mr. P.K. Arora, which has been raised by some of our participants and members. In fact, Sri P.K. Arora, sir, member actuary of IRDAI, gave us a detailed picture of the evolution of insurance industry post IRDAI. In fact, he discussed how from 6 companies we have now 68 companies, and the insurance penetration, the insurance density that got changed, how the investment made by the insurance companies in India are contributing hugely to the economy, how the focus is shifting from savings-based insurance products to risk-based insurance products. He also highlighted the importance of social insurance and contribution of web aggregators and introduction of digital technology by insurance company. Sir also discussed in detail about the FDI and the increase in FDI, how it is going to help the Indian insurance industry at large. So we are extremely thankful to Sri P.K. Arora, sir, member actuary of IRDAI, for his gracious presence and nice deliberation. Sir, in fact, we have a few questions which you need to listen from you, being a member of IRDAI later, your perspective on this, and hope that will help the participants and the members also. Sir, we talk about the COVID standard benefit-based health insurance products which was introduced on 10th of July 2020, particularly the Corona Rakshak, Corona Coverage, having a limited 3.5 months, 9.5 months. It was in fact picked up initially, but in many insurance companies, they have experienced huge underwriting losses. Even some of them have the incurred claim ratio is up to 1800%. I came to know from one insurance company. So due to which maybe many companies have are now discouraged in selling those products. Maybe a high claim ratio, maybe less number of policies sold, or maybe many number of claims that was lost due to the second wave of Corona, which had a lot of hospitalization and casualties. So, sir, now the question is, as many companies are now not quite encouraged to deal with specialized products, health-related products, related health benefit plans like Corona, what we are going to see in the future? Like, will there be a revision, or will continue, or any improvised version of these products related planning?
It is a fact that the ICR of these standard products has been very high. Now you see, it is coupled with the lower hospitalization claims in other segments. So whenever any product is launched in the market, it is expected that the insurance companies will make all out efforts to sell this product in large numbers. In insurance, the law of averages apply. If the subset of the persons who are taking insurance is very small, the ICR is expected to be very high. Had these products been sold in very large numbers, and considering the fact, the incident rate, and out of the incident rates, the hospitalization rate is not that much, the claims ICR would not have been that much high. So having said so, the ICR or the adverse impact is more profound in the recent quarter. So when we close the accounts and we see the figures, we will be making an estimate of that, what is required and what is not required. Anyway, the premiums and other things are also dependent upon the expectations of the future, whether the same condition is expected to be in future also. What is the reflection of the future? If the vaccination happens, if the hygienic behavior which the population is now used to continues, whether the same situation is going to prevail. So considering all these factors, an adequate view will be taken by the insurer, by the IDA as well as the insurers. Right now, it is expected that all the insurance companies should continue to sell the product in the current form. Earlier, it was having 3 terms, 3.5 terms, 3.5 months, 6.5 months, and 9.5 months. So that will continue. But we have got some representations from the companies saying that their incurred claim ratio is very high. We are examining that.
Thank you very much, sir. Sir, you talked about the growth percentage in non-life sector, which is around 5% in 2021 in comparison to 1920. But when we look at motor insurance, as per the General Insurance Council data, there is a reduction of 1.7% in motor insurance premium, which is quite obvious in 2021. The entire year was pandemic hit. Now, sir, many of the policy holders, they are of the opinion that as the motor vehicle is now off-road, maybe due to lockdown or shutdown or containment zone, etc., should not they get a partial benefit of premium as the motor vehicle is off-road? And again, a few of the policy holders are of the opinion that maybe usage-based insurance coverage based on mileage run or based on movement of the vehicle. Of course, it will be completely technology-driven and to be tested and to be implemented later. So, is there any possibility that in future we are also going to see that possible, like partial refund of premium in case of at least motor TP, if not the OD? Of course, TP is not a very high premium. Sir, please.
You see, both the questions relate to the non-life segment, and I am an expert in life insurance segment. But even though you have posed this question, you see, the motor TP premiums are based on the actual claim data, which is managed by the Insurance Information Bureau. All the companies are required to send the data there, and what have been the total premium, what have been the total claims of different categories of motor vehicles, and that adequate actuarial analysis and calculations are done, and then the premium rates are fixed. So you are right that in this year there have been a period of lockdowns where the vehicle movement was restricted, and that might have resulted into the lesser number of claims. It will automatically reflect into the lower claim ratios, and lower claim ratios may lead to the premiums will be dependent upon this experience only as far as motor TP is concerned. So ultimately it will come down to that. Right now, I don't think there is any representation or any request from the company for revision of these rates due to the non-movement of vehicles during the lockdown. Right now, it is difficult for me to say anything on that, but definitely because it will result into the lower claim ratios, and lower claim ratios may result into the lower premiums in future. That is what is expected.
Thank you so much, sir. In fact, one of our participants has raised this question in the chat box. Even though IRDA had given a press release requesting all the hospitals not to overcharge and to allow cashless claim benefits to the policy holders, with the networking hospitals in particular, but still one of our participants has raised this issue that some of the hospitals are overcharging and some of them are not even allowing cashless. So any way out, any step that IRDA can further take, or the insurance companies can further take?
Whenever any such specific instances are brought to our knowledge, we immediately contact the concerned insurance companies and give adequate instructions. They have to follow the extant rules and norms which are there in force for all the companies to follow.
Thank you. Sir, another expectation from the policyholders in particular, health insurance has now become a necessity, as we all know. Of course, the highest contribution that we get is now from health insurance, up next to motor. Around 29.5% of the premium in 2021 came from health insurance sector only. Now, sir, some of the policy holders, particularly they, when they are going for a family floater of a huge coverage, maybe being an annual contract, the premium is also paid on annual basis. The provision of payment on monthly basis or quarterly basis or half yearly basis is not there at present as far as premium of health insurance is concerned. So can we expect that in future probably it will also be made possible, like life insurance, of course, which is a long-term contract, but monthly or quarterly payment mode will also be possible in health insurance premium in particular?
I'm not aware of the exact situation here, but I can say as far as the group medical leave is concerned, we are all covered there. The premium is deducted from our salary on monthly basis only. So that facility is already available for the group policyholders.
Oh,
request all,
thank you. Thank you.
Mr. Murthy, you have got a to us, sir. You just address our sir.
Thank you, Padi sir. Again, very good evening to all of you, all my beloved CMEs. See, this time, as told by Mr. Jivasha, we have drawn all the three faculties. First of all, they are cost accountants. Secondly, we have drawn only on telephonic call. Thanks to everyone for obliging us and be with us. Sir, actually, IRDA is assisting the risk management all over the country, economic, financial, demographical, and also insurance. They also evolved many models, pricing, and liabilities and capital requirements. And all the COVID requirements, for example, after BC, before Corona, or AC after Corona, thanks to IRDA, it has done a wonderful job. In fact, there is any business, perhaps subject to correction by three of you, will not be survived without actuary. You being actuary and our beloved CMA have taken major role in the life as well as the non-life insurance of the industry. A big thanks, sir. Arora Sab has told us the evolution of the industry in number of companies, premium growth, how many business turnover, and investments, and sentiments of savings, not life, more than life, they talk about sentiments, and all the awareness of the industry from the beginning to today, positive growth, penetration rate, density rate, and insights of the industry. A big thanks to you, my dear sir. A big thanks to you. I could not meet you, though both of us are in Hyderabad. Acha, Jivasha sir, you have talked about much about online, but I will tell you one exception to you. IRDA is only offline. IRDA, all officials are going to office even today also. That's something surprising for me. Okay.
No, absolutely. I think you've raised a very valid point, and definitely amidst these tough times, insurance was classified as an essential service, and
Yes.
IRDA played a big role in doing that. And I completely second what you're saying, Mr. Murthy. And another area where we sincerely wish to thank the regulator, that even amidst these tough times, they've always continued to support the insurance companies and also take care of the interests of the policyholders. So indeed, a real commendable initiative by IRDAI.
Being offline, they made you more relevant online.
I'm sorry, I didn't get you.
They being in offline made all of you more to be relevant online.
Yes, absolutely. And that's I mean, continuously we've seen right since the time the pandemic began that they have always come out with regulations which have eased business, be it claims, be it sourcing of policies, collecting documents in all aspects. They have always made regulations which have benefited insurance and which have helped in penetrating insurance amidst these tough times.
And all of us should thank them being stakeholders. They released recently more than 100 circulars. 100 circulars like GST, like income tax. They issued 100 circulars to make all of us safe and alert and stay healthy. Thanks to IRDA.
Absolutely.
I'll add here that only the senior officials are working, coming to office. The other officials, as per the government instructions, they are allowed work from home as per the instant instructions. Sometimes 33%, sometimes 50%, whatever the government says. Accordingly, we implement that. But senior officials mostly are coming to the office daily, but somehow the visitors are not allowed here. So following all the social protocols, social distancing protocols, we have been functioning.
When I talked to PA, I said, "Are you at home?" I said, "I am at office." He told me. Thank you, sir.
He is 50% working from home. Tomorrow he will not be coming.
Thank you, sir. Vaidyanathan, sir. You have started the life insurance with life and new business evolution with some PPTs and standard figures and emerging trends in the business. You also suggested being CMA, 3 major roads, what a CMA can take up. Now the young guy comes, Jivasha. I take liberty being 64 years old. I take liberty with Jivasha, young guy. He started with the risk. VUCA world. Now everybody, every CMA talks about VUCA world now. VUCA world. Technology is game-changing agent. And from all the 4 critical areas, you have given good examples, different products, solutions, technology, the penetration of artificial intelligence in our business, new normal, that is the word. And without technology, there cannot be sustainability and there cannot be scalability, there cannot be viability. Lastly, I put in my own word, Jivasha means hope, Asha means hope. There cannot be insurance without hope. There cannot be insurance without a doctor. I am referring to Vaidyanathan. And everything is only at the end of for enjoyment. Pramod Kumar Arora, enjoyment means at the end of the day, enlightenment or enjoyment. This is the 3 we have gone. We have 3 cost accountants, and 3 of them have taught us, enlightened us very much. A big thanks to 3 of you. Lastly, I thank my beloved president for his excellent president's address, my vice president Raju Iyer for his address, my colleague in the council, Mr. Chitranjan Chattopadhyay, he is the brainchild. This month we are celebrating as insurance month. Last year we have done agricultural month. Thanks to my vice president, Mr. Raju Iyer, we did very well. And we do very well also with our cooperation in the current month also being insurance month. And I thank all my colleagues in the council, Chief Pahadi for navigating the session, and everybody, all my beloved cost accountants, and hope we are closing on time, just 5 minutes delay. And that's all from my side. A big thanks to every one of you. Thank you. Thank you to the department who support us technically. Thanks everyone. And we will go for now national anthem or our institute anthem. Technical people kindly take inspiration from Jivasa, go for a technical aspect of our Geet.
Madam Indakshi.
Yes, sir. Yes, sir.
असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्योर्मामृतं गमया मा सद्गमया तमसो मा ज्योतिर्गमया मृत्योर्मामृतं गमया असतो मा सद्गमया तमसो मा ज्योतिर्गमया मृत्योर्मामृतं गमया